Well, we finally have with us the President of the African Development Bank, Dr. Adesina. We would like to touch on quite a few issues with him, including his second term that he's looking to assume at the African Development Bank. Congratulations. The African Union Council has endorsed you.
It is a great honor to serve as President of African Development Bank. It's not a job as far as I'm concerned. It's a mission that I have. And I feel tremendously humbled that African Union Executive Council will endorse my candidacy as the only candidate. And that says a lot about not just me, but it says a lot also about the bank and what we've done and how the countries appreciate what we've done.
You were at the African Union, and the African Union has finally put the Africa Free Trade Area into motion. In terms of operationalization, we know that South African Wamkele Mene has now been appointed as Secretary General of the Secretariat. What are you hoping for the bank to, how are you hoping for the bank to work with the Africa Free Trade Area for its operationalization?
Well, first and foremost, let me congratulate South Africa on that, the person who's going to be heading the African Continental Free Trade Area. As you know, the African Continental Free Trade Area is the best thing, as far as I'm concerned, to happen to the African continent. You know, you got a lot of small countries that are trying to trade with each other and trade with others, and they don't have the market size and the negotiation power to be able to do that. So this creates a huge market of $3.3 trillion, which is the largest free trade area, by the way, since the establishment of the World Trade Organization. So Africa can no longer be ignored. Now the question is, how do we operationalize many of these things? Now the African Development Bank is at the forefront of supporting that. A key component is you've got to have a secretariat, right? And so we provided $5 million for the establishment of that secretariat, which is going to be, it was actually based now in Ghana. The second thing is that we've been supporting the conversations on terms of what the tariff schedules will be done and non-tariff schedules, and also a lot of the other technicalities that have to be done on that. The bank continues to support that. The bank is also financing with other partners the critical financial instruments that are needed to undergird this kind of regional integration, because you have to be able to pay money, move money from one and invest across borders. And so ourselves, we've already invested $1 billion in trade finance that makes it possible for people to be able to trade, access to finance across countries. We've also, working with the Afri-Exim Bank, by the way, that also have a new financial payment system that will allow trade to be able to occur across those countries. But the bread and butter of trade is infrastructure. If you don't have infrastructure, what are you trading? Right? And so the bank continues to invest hugely in infrastructure. We've invested more than $9.5 billion in regional infrastructure, in ports, in airports, in rail, in highways. And these are the things that are very critical to be able to move goods from one place to the other. And so we will continue to do our work. You know, we didn't wait for the Continental Free Trade Area to continue to invest in infrastructure. So we just continue to do more of that.
Were you surprised that Nigeria tried to challenge Mene's appointment?
Well, you know, I mean, it's like an Olympic race. You got lots of people that are running the race, so that's just the way of competition anyway. I think everybody has Africa's interest at heart. I think at the end of the day, we support Africa Continental Free Trade, and we're going to throw our big support behind it.
The coronavirus, this is a problem that's facing the whole world, and it's not just a health crisis. It also speaks to what can happen to countries in Africa that are trying to supply China, trade with China, and we understand that it might knock off about 3% of China's GDP. What sort of mitigation do we have in place?
Well, you know, it's quite unfortunate what has happened with the coronavirus. It's now a global crisis, right? And it's affected more than 60 countries right now. And as you know, there was a case that was found in Nigeria, another one in Algeria. And so far, Africa has been kind of not affected so far, thank God, in the situation. But, you know, prayers are important, but you've got to take precautions as well. I think part of the issue is that, first, we need to protect ourselves a lot more. And so in terms of surveillance systems, epidemiological management systems. I want to commend the WHO and my brother, Tedros, that's doing a great job of managing that. At the beginning of this crisis, no more than 2 countries actually had the ability to be able to screen and diagnose what's happening, South Africa and maybe one other country. But right now you have about, maybe 46 of them, which is actually very good. So preparedness is rising. So maybe a little bit of the delay in having any cases have actually helped us in being able to build that capacity. Second is the fact that because we have been affected largely by Ebola, I think the preparedness of the countries was much better in terms of, sensitizing population, wash your hands, do all these things. It's like, these are the things that normally we were doing during the Ebola. So maybe there's an impact of that in it. But third, however, is that we do need to still build, in my view, a very solid quality healthcare infrastructure on the continent, and I can talk about that later on in the interview. But when it comes to what all this means for economies, you've seen already $6 trillion has been wiped up of the global economy, right? And so supply chains are being disrupted, right? From agriculture to electronics to small parts for vehicles, everything around the world. China used to account for no more than 1.5% of global trade. Now they account for 1/3 of global trade. So you can see the interconnectedness and the risk factors are so critical from this situation. So, so far, we think that we've seen it as a potential headwind. We are still trying to understand how that might affect Africa, but so far, it has not created too much of a risk to date. And we hope that we can maintain it that way.
And of course, we have the African Union's Africa Centers for Disease Control. Is there any direct benefit that they can get from the African Development Bank, as you say, to mitigate the effects of the coronavirus?
We actually supported the establishment of the Africa Center for Disease Control. And so we will continue to support them in that. There are a number of areas that we have to ramp up support for. First is diagnostic centers. Second is actually supporting countries to have access to some of the things like gloves, protective wear, and masks, and so on, which are very, very important. But also trying to make sure that there is the overall public healthcare system continues to be strengthened. So I think that so far, in fact, next week, as soon as I get back, I'm having an emergency meeting at the bank in terms of looking at how we'll be supporting countries as they deal with this particular pandemic.
Let's talk about the World Bank's recent statements about African countries being over-indebted. You came out very quickly in defense to say that that is not the case. However, we see countries like Zambia, for instance, that are unable to meet, even if it's bilateral or lending or lending between them and China alone, but that are unable to meet their obligations. Why would you come out in defense?
I think it's not a battle between the World Bank and us. It's just an issue of being clear on what the facts are. The fact of the matter is that African countries, right now, Africa does not have a debt crisis. And when narratives go to suggest that he does have that, no, he doesn't. And it's not just about emotions, it's about the facts. Yes, the mean GDP to debt to GDP has risen in Africa. It used to be about, probably about 38%. It's gone about 56%. But yes, the average debt to GDP in Africa today is still about 40%. Total debt to GDP is about 40%. Right? Compared to 22, it used to be 22% in 2012, right? But the IMF threshold for prudent debt management is 60%. So what's the worry about? So we are not in a debt crisis. So I don't want that narrative to be there. Although the volume of debt has increased and the speed has been faster, but with Africa, it's not in a debt crisis. Now, the thing to also bear in mind is that it is not us, the multilateral development bank, the African Development Bank, that's contributing to Africa's debt. Look, our loans are some of the cheapest you can ever find. Where will you find loan for 1.2% for 40 years? You also have a 10-year moratorium on repayment, right? So our debt, our cheapest concessional debt you can ever find. If I talk to somebody, you say your debt is like a gift. Of course it's not a gift, you have to pay it back. But so it's not correct. The third thing to pay attention to is the fact that Africa's debt increase largely has occurred because many countries are actually going to the international capital markets, to private debt issuers. That's really where the problem is. Because in 2 years alone, the size of that Eurobond was $53 billion, right? That's where the rush is. So people should look at the right places. That's where it is, because there, nobody controls you. You can read what you want. The yields are very, very high. Of course, some people will say, oh, well, we just issued some debt instruments and it was oversubscribed. Yes, why will it not be oversubscribed when you're paying so much? They are smart enough to know that, wow, this is a good place to be, right? And so this is important, and it's not controlled. And so you can have people that will go over there, issue debt instruments, use it to plug holes in their own budget. The projects that they want to spend it on may not be so clear, right? And in a lot of cases, most of this is short-term maturity loans for which you're going to actually be paying a lot of money, right? And so this, in my view, is where the issue is. And of course, there are issues with certain bilateral loans that countries are having where the terms are not transparent, right? And where, of course, countries are trading off their own long-term benefits just to be able to get the short-term loans. Of course, the real cost of it to your economy is very high. So the issue for me, it's about transparency of debt. The issue is about understanding the structure of debt. Debt itself is not a bad word. It's bad debt that's a very dirty word, right? So we must make sure that people are using debt prudently. They are also not just using debt alone. They are mobilizing resources domestically, right? They are also making sure that they are prioritizing expenditures so that not everything has to be done by government. The private sector can carry quite a lot of the weight. So therefore, getting private sector more involved in infrastructure, in my view, will reduce infrastructure debt-related debt stocks that you have in Africa today. And of course, at the end of the day, is efficiency of public expenditures. And so many of these things are things that we have to work on. So we don't have any issues. It's just making sure that the information is clear and that we all know what if you go to a doctor, you have to have the right diagnosis before you can give them the medication.
And are you, as the African Development Bank, then playing a role in that space of institutional capacity to ensure that these things that you say should happen actually happen?
Actually, yes. And we are doing that together with the World Bank, by the way. We are working very closely with the World Bank. I mean, my staff will tell you how closely they are working together with the World Bank and the IMF. The debt sustainability analysis that we use collectively to make sure that countries are within their debt limits, it's within that. The bank participates very actively with IMF on that particular issue. The other thing that we are doing is that, you see, debt, when you're taking debt from the outside and you're taking currency in Forex, right? You run significant Forex exchange risks, right? And if for some reason the economy downturns, you're going to have problems of balance of payments and being able to repay back your debt. So local currency financing is a very, very important part of this. So the African Development Bank has launched massive programs on financing debt, but in local currencies. In fact, we've done it here in South Africa. We've done it for a number of other countries, Uganda and so on, and Nigeria, wherein you must also match the maturity of your debt with what you are spending it on infrastructure. So if your infrastructure is clearly going to give you returns in the long term, you want to make sure that the maturity matches the revenue profile of the investment that you are making. We are also supporting African countries to basically just do better public expenditure reviews. I mean, you and I will not just take our credit card and go anywhere and just buy anything we want, right? You've got to prioritize. Not everything you see in the store that is important. It's not everything you also see that you like, that you can afford, right? And so the same discipline that you and I will use when we use our credit cards is also what we try to work with our African countries to prioritize expenditure and to make sure that they are not overstretching their budgets.
And South Sudan, we see a unity government coming in, but of course the country remains fragile. Are we going to see the African Development Bank assisting to ensure lasting peace and stability there?
Oh, absolutely, yes. By the way, the bank, there are 3 countries that actually owe arrears payments to the bank. And one of them, of course, is Sudan, which includes both Sudan and South Sudan, around their zero option policy. The other one, of course, is Somalia and Zimbabwe. Just last week, by the way, Wednesday, the African Development Bank's board approved a framework, right, in which we are going to clear the arrears for Somalia, which is huge. And I must say the UK government worked very, very closely with us to provide the financing that will allow us to clear off that arrears. It's a big, big issue, right, that will free up the bank to be able to lend and other multilaterals and bilaterals being able to lend more to Somalia, and that will allow us to have more resilient Somalia as they deserve. But we have 2 others left. We have Zimbabwe that's still left, and we have Sudan that's left. And in the case of Sudan that you said, obviously you cannot develop if there's no peace and security. And so the AU negotiated thing for them to come back to peace is very fundamental, and I salute that particular effort. We have to make sure that it stays, because that is absolutely critical. We have been supporting South Sudan in many ways. We were the one who supported them to set up their revenue collection authority. Now they've actually increased significantly how much revenue, their taxes and collections that they are having in South Sudan. We're supporting them in agriculture. We are also supporting them on capacity building as well as infrastructure more.